certain steps in your beginning when you start to invest. And you need to. You don't have to have millions before you can invest. Number one, recognize this, that risk and returns go hand in hand. The lower the risk, the lower the return. The higher the risk, the higher the return. If you want your money to be safe, you can keep it in a savings account. But you get almost nothing in most economies now. The interest on the money is nothing to write home. But you've got to realize also that the higher the risk, the higher the return. And nobody wants to lose money. However, without risk, you can't gain. Investment is a necessity for you, for your children, for your future. Investment is a necessity for the times when your bones are tired and you have something to live on. It is bigger than just pension, which is already predictable and that you draw from. Number two, diversification is paramount in your lesson on investment. What does this mean? That is, investing in different areas so that you did not put your money in one thing. You diversify in order to grow your money. You put in real estate, you put in share stocks, you put in treasury bills to grow the money, to compound it. It was Albert Einstein who said one of the greatest mysteries of life is the mystery of compounded interest. Then, in investment, have a margin of safety. In other words, if they are selling a property for $5,000, see how you can get it. Next truth is some degree of risk management. You need to have a risk management system in place. I bought this real estate. I'm expecting this level of rent. If the rent didn't come, and I need to fix the shingles, the broken window, what do I do? So you have a risk management system in place. Volatility, you need to realize if what you want to buy is volatile, check your own emotion. You can't control some things when the volatile seasons come. So maybe if you find that your risk tolerance for e-coins is limited, maybe not to put much money there. If your risk level for real estate is very high, maybe that's where to put your majority money. And then the remaining in other areas, stocks, shares, real estate investment trusts. But do invest. If you don't compound what is in your hand, it will remain the same. Then you must learn to control your destiny. How do you control your destiny? No one is interested in your finance, not your employer, not even the people who are handling your pension. So you've got to protect what you have, not governments. They never give up. Keep watching business news. Know the market trends. Know the area of your city where real estate is going up. If it is in nations where you can buy land and keep your land holding, and have your documents, do so. If it's in nations where you can buy properties, particularly the ones young people want to rent, buy and rent out. The rent may bring you some degree of equity, but the biggest will be as the property rises in value. So you have two triple edge profit from your investment.